Did you know that one single trade could make you a millionaire overnight, but one wrong move could wipe out your entire bank account in seconds? Welcome to the wild world of trading versus the calm, calculated path of investing, two completely different beasts in the financial jungle. Today, we're diving deep into the trader's hustle versus the investor's patience. And by the end of this video, you'll know exactly which one could change your financial future or tank it. Stick around, because we're about to uncover some mind-blowing truths that Wall Street doesn't want you to know. So, here's the big question. Why do some people make millions in the stock market while others lose everything? It's not just luck, it's about whether you're hustling like a trader or playing the long game like an investor. Imagine this. One person's glued to their phone, heart racing, watching stock charts spike and crash, while another's sipping coffee, checking their portfolio once a month, cool as a cucumber. Both can make money, but their paths couldn't be more different. Which one are you? Or better yet, which one should you be? Let's break it down and find out what's really at stake. First, let's talk about trading. Picture a trader. It's 7 a.m., they're chugging energy drinks, staring at 3 computer screens filled with candlestick charts, news feeds, and X posts blowing up about the latest meme stock. Trading is like a high-stakes poker game. You're buying and selling asset stocks, crypto, options, you name it, sometimes in minutes. Trying to profit from tiny price swings? Day traders, swing traders, scalpers, there, all in this fast-paced hustle, chasing quick wins. Sounds thrilling, right? But here's the kicker. 90% of day traders lose money. 90%. That's not a typo. The hustle is real, but so are the risks. Why? Because every trade is a bet against the market's chaos. And the market doesn't care about your feelings. Now, contrast that with investing. Imagine an investor. They're researching a company's earnings report, sipping tea, and buying shares they plan to hold for decades. They're not sweating the daily market dips. They're betting on the big picture. Think Apple growing from a garage startup to a $3 trillion giant. Investors are the marathon runners of the financial world, banking on compound interest and long-term growth. Here's a crazy stat. If you'd invested $10,000 in the S&P 500 back in 1980 and just left it alone, it'd be worth over $1.2 million today. That's the power of patience. But hold up before you think investing's the easy road to riches. There's a catch we'll get to in a minute. Let's zoom in on the trader's hustle. Traders live for the adrenaline. They're using tools like moving averages, RSI, and Fibonacci retracements. Don't worry if those sound like alien terms. They're just ways to predict price movements. A trader might buy a stock at $50, sell it at $52 an hour later, and pocket a quick $200. Do that a few times a day, and it adds up. But here's the first shocker. The average trader's holding time for a stock? Just 11 minutes. 11 minutes? Imagine making life-changing financial decisions faster than it takes to cook a frozen pizza. That's the hustle. And it's not just stocks. Crypto traders are flipping Bitcoin or Dogecoin. Options traders are betting on volatility, and some even trade Forex, where currencies move in fractions of a penny. The potential for profit is huge, but so is the stress. One bad trade, and you're not just losing money, you're losing sleep. Now, let's flip to the investor's patience. Investors are the Zen masters of finance. They're diving into balance sheets, revenue growth, and dividend yields, picking companies they believe in for the long haul. Think Warren Buffett, who bought Coca-Cola shares in 1988 and still holds them today, raking in billions. Investors diversify stocks, bonds, real estate, ETFs to spread risk. Here's a wild fact. If you'd put $1,000 into Amazon when it went public in 1997, it'd be worth over $2 million now. That's patience paying off. But here's the twist. Investing isn't just set it and forget it. Markets crash. .com bubble. 2008 financial crisis. 2020 pandemic. Investors have to stomach those gut-wrenching drops and trust their strategy. That takes serious discipline. So, what's the real difference in risk and reward? Trading is like riding a roller coaster, blindfolded. You could double your money in a week or lose it all in a day. Studies show that only about 1% of day traders consistently make a living. 1%. It's like trying to become a pro athlete. Meanwhile, investing is safer but not risk-free. The market's average annual return is about 7 to 10% after inflation, but you're not guaranteed that every year. Some years, you're down 20%. The second shocker. Most investors underperform the market because they panic and sell during crashes. Patience sounds easy, but when your portfolio's bleeding, it's a test of nerves. Let's talk lifestyle. Trading is a full-time job, sometimes more. You're up at dawn, tracking pre-market moves, analyzing news, and glued to your screens until the closing bell. Miss a tweet from a certain billionaire, and you might miss a 20% stock jump. It's intense, and it's not for everyone. Investors, on the other hand, might spend a few hours a month rebalancing their portfolio or reading annual reports. They're free to live their lives without checking stock prices every 5 minutes. But here's the third shocker. Even investors can get sucked into the hustle. Thanks to apps like Robinhood, Some investors start chasing hot stocks like traders, blurring the line and risking their long-term goals. It's like training for a marathon, but sprinting every mile you'll burn out. What about the tools and strategies? Traders are like tech wizards, using platforms like Thinkorswim or TradingView, crunching real-time data, and following patterns like head and shoulders or double bottoms. They're betting on short-term momentum or news catalysts like a company's earnings beat or a crypto whale's tweet. Investors, meanwhile, are like detectives studying a company's revenue, debt, and competitive edge. They're buying into stories. Think Tesla's vision for electric cars or Nvidia's AI revolution. But here's the thing, both need discipline. Traders need to cut losses fast, while investors need to avoid chasing trends. Ever heard of the dot-com crash? Investors who chased tech stocks in 1999 got crushed when the bubble popped. Now, let's get to the mindset. Trading is a psychological battlefield. You're riding emotional highs from a winning streak, then crashing into doubt after a loss. Traders need to stay ice cold, sticking to their strategy even when the market's screaming chaos. Investors need a different kind of grit, the ability to do nothing. When everyone's panic selling, the best investors sit tight, trusting their research. Here's a mind-blowing example. During the 2008 financial crisis, the S&P 500 dropped 57%. Investors who held on recovered and doubled their money by 2013. Those who sold, they locked in losses. Patience isn't just a strategy, it's a superpower. So, which one's right for you? If you love a challenge, have time to burn, and can handle stress, trading's hustle might be your thing. You'll need to learn technical analysis, stay glued to the markets, and accept that losses are part of the game. If you're focused on building wealth over time, prefer less stress, and want your money to work while you sleep, investing's patience is the way to go. Start with a diversified portfolio, maybe an S&P 500 ETF, and let time do the heavy lifting. But here's the final twist. You don't have to choose just one. Some people trade with a small portion of their money for fun and invest the rest for stability. The key? Know your goals, know your risk tolerance, and never bet more than you can afford to lose. Let's wrap this up. The trader's hustle and the investor's patience are two sides of the same coin. Both can lead to wealth, but they demand different skills, mindsets, and lifestyles. Trading's like a sprint, fast, risky, and thrilling. Investing's a marathon, slow, steady, and powerful. Whichever you choose, the real secret is starting now and sticking with it. Want to dive deeper into making money in the markets? Smash that like button if this video opened your eyes to the trading versus investing debate, and hit subscribe for more financial breakdowns that'll help you outsmart the market. See you in the next one.